Today I'm going to be talking about your financial goals and what you should be thinking about with your business. My name is Tony Cameron with TLDR Accounting, and we provide tax and accounting services to therapists in private practice and other small business owners. So, financial goals. The four big ones that we're going to talk about today are your own time off, having money to pay your taxes, the growth of your business, and your own retirement. Now, there are other areas like student loans come up because it's a big one, saving to buy a house is a big one, but these are the four big ones that a lot of folks put off, or they have confusion about, or they're worried about. So the first one is your own time off. So burnout as a small business owner is super freaking common, right? No one takes time off. They're working, 40, 60, 70-hour weeks. They're answering emails at midnight. Like, you're just hustling all of the time. I don't think that's a good thing. I believe that even as a small business owner, you should be setting aside money each month so that you do have 2 solid weeks that you can take off each year, even if you don't take them all off at the same time, right? Maybe you take a week off in spring and a week off in fall, but that you do take off and completely disconnect, right? So I call that PTO savings because it's paid time off. We recommend that you do set aside money for 2 weeks of PTO for yourself. So usually that's just 2 weeks of salary. If you're not an S corporation and not on payroll and you're just a sole proprietorship or a single member LLC, that would be 2 weeks of what you take out of the business. So if you take out of the business $5,000 a month, you're setting aside then $2,500 so that you have that money available. So even if you take time off, you can still take that money out of the business. Now, that can be a large sum of money, especially in the beginning. And so our general recommendation is, you set aside a little bit each week. You start small, and eventually then you'd be like, oh, wow, I can take this time off. I have enough covered, to cover my office rent, to cover all my monthly fees, and I can take this week off here, right? And I'll be good to go, and I can turn off my computer and not look at my laptop. But that lets you recharge and then come back to your business with more energy and ready to, hit the ground running. The next is tax savings. So I highly encourage everyone to be saving for taxes each month. It's just one of those things, you need to pay taxes. And if you're setting it aside each month and you're not touching that money, and then you have the money to pay your estimated taxes, you don't need to worry about it, right? You don't need to be anxious about it. It's just like, that it is done, right? Our general recommendation is you're setting aside 25 to 30% of your income into a savings account that is only for taxes. A lot of times I tell folks to rename it, if they can nickname an account, your tax account. You do not touch that. So as I mentioned, we're setting money aside for PTO. A lot of times folks will put a savings account that's business savings, and they'll just toss their PTO in there, and then a separate savings account for taxes. The third area that you should be thinking about with your financial goals is growing your business. What are you looking to get out of your business? Are you looking to, just earn, like, I'm not saying just here, but say your target is you want to earn $70,000 per year. You want to work 30 hours a week, and that will take care of everything. If that's your goal, freaking fantastic. You have a plan in place then. Your goal is to hit $70,000 of taking cash out. So now we can back into how much total cash you need to earn, right? So the thing you need to know is, what are you trying to get out, right? That's one person. That might not be your goal. Maybe your goal is to grow a group practice and, have 10 therapists working for you plus an assistant. Or maybe your goal is, to create a franchisee, or, all of this, or expand into multiple offices, right? So the big thing you need to know is, what do you want to accomplish with your small business, right? Like, are you eventually going to go public? Is that your goal? Are you a tech startup and your goal is to just skyrocket? Make sure you document that, and so that you can look back on it when you are having a hard day, to be like, oh, this is what I'm trying to do. Here's what I'm doing with my business. Here's what my financial goal is with growing my business. Maybe it's have X number of employees or make X number of dollars this year, right? And then lastly, the fourth one that I was talking about is saving for retirement. Much like PTO, this is an area that a lot of small business owners completely ignore. I'm like, hey, have you thought about saving for retirement? And they're like, that hasn't even crossed my mind. My general rule of thumb is you should be saving 10% of your income for retirement. In a low income year, that's not a lot of money. In a high income year, that could be a lot of money. And one of the things to remember is in a high income year, you want to be setting aside more of your income because maybe something like a pandemic will come along and your business decreases. Or maybe if you're in mental health services, your business increased because of the pandemic, right? These are things that we can't see coming down the horizon. And so if you take advantage of when you have a good year to stock some extra money aside, then you'll know that you're contributing to that someday you'll be able to retire and you'll have that money to depend on, right? So the big areas that we talked about was PTO. You should be setting aside money for 2 weeks paid time off each month. Saving for taxes. We recommend setting aside 25 to 30% of your income for taxes each month so you can make your estimated taxes. Growing your business. Make sure you have your target in mind for what you want out of your business. Maybe that's $100,000 in income this year or hiring your first employee. You want to make sure you have that goal in front of you so you know it and you can always refer back to it. Lastly, make sure you're saving for retirement. The general recommendation is 10% of your income each year so that you're not ignoring that. And when it does come time to retire, you have that money set aside. Hopefully you found this helpful. If so, subscribe below, or if you want some more information, book an appointment with us.